Okay, my apologies, you guys. All right, for those of you just coming back in, I apologize. I didn't take the host back from Matt before he jumped out. So, again, sorry for that. You know, I'm not perfect. You just got to laugh sometimes. Let me see if Taylor's going to jump back in. Oh, Lord. All right. Again, thanks for jumping back in. I'm waiting for Taylor to log back on. So sorry about that. Technology's king, right? When it goes down, we all go down. All right. Can everybody hear me? Anybody? Okay. All right. So while we're waiting on Taylor to jump back in, here he is. So Taylor, sorry about that. I didn't take the host privileges back from Matt, and I know he had to go. So anyway, here we are. We'll let you go ahead and take back off. Do your thing. Welcome, Aaron.
Here we go. Okay.
So I was going to say earlier when Karen was talking about lenders, I let my clients know that there are several lenders that I really enjoy working with, and I give them the reasons why. And I say, you don't have to stick to any, you don't have to use one, but if you want me to recommend one, I'll be happy to do that. So that way I'm not like, telling them you have to use the people I choose for you. And then, and usually they say, well, I trust your judgment, so, it, that way, I mean, I'm hoping I'm not, stirring them or anything like that. So.
Aaron,
I think
that's on a horse.
What? What, do you see a horse?
It looks like you're sitting on a horse.
Oh, I'm filling water troughs.
That's awesome. Where do you live?
Oh, I live in Mitten Hill, but my daughter and I ride at a barn, and to help pay for lessons, we work here 4 days a week. So
Very cool.
yeah.
She's one of our super troopers who jumps on even though she's got another commitment.
That's the way it should be.
If you see mud all over my shirt and stuff, that's why.
That's awesome. So that answer is good, and that's really the direction that I was going as well, Karen. I mean, you have to be the professional, and you have to feel confident letting your clients know that there is a lot at stake, and there are tons and tons and tons of things that can happen if you're not in the right hands. So if you want me to stay compliant and give you a list of 3 banks or lenders, I'll do it. I'll give you 10 if you want, right? But if you want me to give you the one that I can stand behind, the one that I know picks up the phone when I call them or calls me back, the one that if we run into a problem, which we will, calls me, lets me know what the problem is, so we're on the same page, and circles you in so we can all say, okay, here's where we are and here are our options to move forward, right? If you want that person, then I'll give you that person. And when you have that conversation, it's going to go right back. I'm sorry I didn't catch the last lady's name, but it's going to go back to what she's saying. They're going to say, no, I trust you. I want your person. Perfect. That's who you need to be with, because they're the best combination of knowledge, products, rates, closing costs, all of it. And that's just super important. I mean, I had good friends of mine that I've closed several transactions for them, and their neighbor told them that they just did a refinance and it didn't cost anything, and they were able to get 90 grand cash for the same payment they're making. So they trusted their neighbor. Well, I got on the phone with them this weekend, and of course it's Quicken Loans. And as soon as I found that out, I was like, send me an estimate. I'm going to review it with you and show you where it's wrong. They're infamous for this. And here comes a loan estimate at 2.99% interest rate and $4,600 in closing costs. And a 3% interest rate is zero in additional closing costs, 0 points. So the payment goes up $1, but you don't pay $4,600 in fees. You can't recoup $4,600 in fees on a 360-month loan, not at $1 a month, right? But those are the types of things, especially the more you're in the business, the more of those stories you'll have to give if needed. But it's very, very simple. Most importantly, it's the person I know that I trust, because they're going to care about you as much as I do, and they're going to educate you and be honest with you and just give you all the facts. It's the best part about our business. It's a relationship business, but it's a factual business, right? This is what you qualify for. That's a fact. That's not a one lender versus the next. We're all operating on the same guidelines. This is what you're going to do from start to finish. That's a fact. This is what you need to pay to get this house. So when you really believe in that, first and foremost, it will come across to them. And as I was saying, I think when I got cut off, when you really care about your clients, that will show. And that's all that matters. Everything you do for them, if you care, will be right, especially if you're aligned with the right team, because if you make a mistake, everyone else is going to pick you up. And we're going to keep moving forward together.
Taylor, I appreciate you saying that. Some people come into the house hunt or search with a car buying mentality, and they think, I'm gonna find the cheapest agent, the cheapest lender, and we're gonna get this done, and then I'm done. I'm good. But what they don't understand is they're gonna need us well after the closing. They're gonna need questions answered. They're gonna need documents, and that's what we do. We're not a one and done service. I mean, we're here. We're legitimate business owners, and we want the best for our clients, not just to get through the transaction, but 5 years from now, when you come back and you have a question about your loan. So I think it's the way we position ourselves. If we act like a car sell, and I'm sorry if you sell cars, I don't mean to hit on them, but you know what I mean by the old adage, you're a used car salesman. I just want to get you in and out and make my commission. That's not what we do. But unfortunately, there are some in the business that position themselves that way. So we have to stand out and be loud and clear about who we are, and we are in business to serve others.
That's correct. And a lot of times those people, when they come to you all with the rates that they saw advertised and the pre-approval that they already got, it's typically with an internet lender. And an internet lender is sitting in a call center, and they're just trying to just bang out as many as they can, as quick as they can, and keep it moving. That becomes it is a numbers game, but that just becomes strictly a numbers game. They're not in the community. They're not necessarily, and I'm not saying this, I shouldn't make a blanket statement. That's not right to do. I'm sure there's plenty of them that do really care. But I also know how many times I hear horror stories about this. And you don't hear the horror stories on the front end. Oh yeah, they're great. They answer my calls. Yeah, they were super fast. Well, of course, they were earning your business. You called and you said you want to buy a house, and they want to do a pre-approval for you, and they're sitting there from 9 to 6 anyway, so they're going to do it for you as quick as they can. That's great. Those are the people that disappear when problems arise. And that's what people don't understand, where it really costs them, right? What's it going to cost you if a problem arises and you haven't heard from the person, and for 3 days they're not answering your phone call leading up to your due diligence expiring? What's going to happen if there's a problem and you already have movers scheduled, utilities scheduled, all these things scheduled, and we've got a domino effect of closings? So I'm going to be feeling the pressure from 4 different agents down the line. We've got the worst part about it is we have seller upon seller upon seller who's all being impacted for nothing that has to do with them at all, and these people don't answer the phone. Stuff like that is what matters. Stuff like your pre-approval letter and who it comes from. If you haven't experienced this already, test the theory. Get a pre-approval letter from Wells Fargo or Bank of America and go and write an offer with it in a competitive situation. It's people don't want to work with banks. I'm just gonna call it what it is, because of the lack of service. That's where most lenders, and definitely still some people that work with banks, again, I don't want to make a blanket statement. If you want to work with someone at Wells, that's amazing, go for it. I know several that are amazing. And I'm surprised they're still there, but work with a person that you know is going to pick up the phone and represent your brand, because you're building your brand and your team has to contribute to that in a positive manner.
So we're getting near the close of our time. Are there any other questions? Taylor, I would like for you to tell us, if we contact you and say, hey, I've got a client, we need a pre-approval, what happens from that point on? What does it look like? What does the process look like?
Well, the first thing we always do is start with a phone call, or at least we offer that. Phone calls, the first 5 to 10 minutes of that conversation, so much can happen. We can ask the right questions to know the direction we need to head. We can uncover any fears that they have that they're not telling anyone about that can create doubt. We build relationship and rapport. We just all get on the right page. And I do have some referral partners that they know how I work and how our team works. And so they'll tell their client every time, are you going to want to go over this all over the phone, or are you going to want to submit an application online? Most people want to submit an application online. And so then he just tells them, okay, do you want to talk to Taylor first before you do that? Or do you want to just submit it and then he'll call you and review it with you? Either way, we're going to have that initial consultation. And it's going to be the same either way. If they submit it online, then we just have a little more information to start asking more, further questions. But it starts there. Have a conversation, uncover any concerns, get an idea of where they are mentally. What are your time frames? Do you have purchase price in mind? Do you have a down payment in mind? Very general stuff. Then we get their information. We review the application. So we're going to look at their credit report. We're going to structure the loan program based off of what we already know, a payment they're trying to reach or a purchase price they're trying to reach. I always still tell people, no matter what they tell me, I'm going to let you know the max that you're pre-approved for, just so you know. It's not about you going out and maxing out your budget. We don't want that. You have to be comfortable. But if you're pre-approved for $600,000, I want you to know that. So, and I'll ask people, if you want to go straight to a purchase price, we can do that. Or do you just want me to tell you what you're approved for, the monthly payment and the down payment that corresponds with that, and then we can adjust? Everyone says, yeah, that sounds great. So you get the information, we build it, we know what they're pre-qualified for, right? Hopefully they go ahead and upload their documents and we can confirm it's a true pre-approval. And then we get back on the phone with them. Or one thing I always do is I like to email them and give them the details, give them that pre-approval amount. And I go ahead and connect them with my assistant or my processor, depending on where they are in the process. I also will send an email to you guys, making sure that everyone's on the same page. So it's an email, for example, to Karen and the buyer. Hey guys, really enjoyed speaking with you today. Everything looks great. You're pre-approved for $300,000. Again, just to recap, the minimum down payment on that is X amount. You put it in dollars. It's not 3%, it's $8,700, right? You have to know that. The closing costs that correspond with that price point are $6,200. So your cash to close is $14,900. Make it very clear. Your estimated monthly payment with taxes, insurance, anything else is this. If you have any concerns or questions about that, let us know. But otherwise, this looks great. Like I said, we'll get the pre-approval letter to you, and then it's up to you all. At that point, if there's questions, let us know. Otherwise, you're off and finding a house. We will go ahead and take a few extra steps just to speed things up. We order verifications of employment. If we don't have the documents already, we're going to push to get those, because it's going to save everyone time and energy and hassle later. So we want to have a full file sitting and waiting on you guys to get a contract. Once you go under contract, that's when we tighten it up with the purchase price, the due diligence, the earnest money, and we send the loan. We order title and appraisal. It's the only two things we'll be needing at that point. And as soon as they sign, we're sending the loan to underwriting. Our goal is to get you guys a conditional approval in no more than 7 days. If everybody is on top of it and documents were in prior to contract, it's typically 3 or 4 days. And you have a conditional approval. We know exactly what's left, what we need to satisfy the underwriter, so they'll give a final approval. Going back to that email to you all, that's where we also address closing costs or cash to close, any conversations we've had with the buyer will let you all know that. Right. And I always ask the buyers, like, everyone needs to be on the same page here. Is there anything you don't want me to tell Karen? No, most will say no, it's free game. Okay, perfect. Because I want to let her know that you have enough for down payment and closing costs at 200,000. But if you go to 250, like you're approved for, we're going to need to start getting seller concessions, right? Or we have to have, $4,000 in seller concessions, things like that. Which, by the way, if that's the situation, I will tell you, I'm always letting the buyers know that be prepared to offer over ask. If Karen tells you don't need to on this property, trust her. She's the expert on the actual property. But the general market here, if you want to get a seller to pay your closing costs, then you need to give them what they're asking for their house, and then above and beyond to get that money back. And we'll quantify that for them too. You can pay $5,000 in closing costs, or you can raise your offer $5,000, and then your down payment goes up by X. It's $40, and your monthly payment goes up $22 a month. So now they can quantify it. Do I want $22 a month on the payment that he gave me and an extra $5,000 in my pocket, or do I want to get that money from the seller? It's just all stuff, again, so everybody is on the same page and has the right expectations, setting up for success. But once you're under contract, conditional approval in 7 days tops, and then following up with you and the buyer to let them know what else is needed. We also touch base with the listing agent. Listing agents are typically in the dark for 30 days, which means they start calling you all and asking you guys questions, which means you have to call us and ask us questions, which means you're wasting time doing stuff you shouldn't be doing. All right. So we call the agent on the front end, introduce ourselves. They know our name. They saw the pre-approval letter. We build them up with confidence as well, where we stand in the process, how quickly we're going to get things done. We'll touch base with them to let them know that the appraisal is in and it's good. We don't ever tell them the value. We're going to let them know that the appraisal's in and it's good. And if there's a problem, we're going to tell you guys first, and then we'll address it together. But it's that front end. Here we are. Call us if you have questions. In the middle, appraisal is good. Title work is in. Conditional approval is already there. Buyers are, sending us documents as we speak. CD has already been out and signed. We send our closing disclosures at time of conditional approval. So it's, again, a touch point for them, and then a touch point for everybody at the end when we get our clear to close a couple days prior to closing. All of our ops staff are incentivized and bonused based off of early clear to closes. The mortgage industry circumvented this 3-day rule by getting an early CD out, and then they can get a final CD an hour before closing, and everybody is just, running wild and stressed out of their mind. And it's just not acceptable. So our philosophy is our CTC has to be 3 days before closing, which then allows us to have final documents and final numbers a minimum of 24 hours before closing. Gives everybody time. Any questions on that? Karen, I think you're muted, but I saw your mouth moving.
No, I said it's good information. Thank you.
Okay,
Are
you're
we going to
welcome.
get your contact information as well, or do we have to go through Matt?
You have to go through Matt. You'll never hear from me again
Okay.
after this.
Oh, I don't think so. I don't think so. I don't think so. I don't think so.
Totally kidding.
Okay.
We're
I
going to
got
get
it.
you my information, my business partner's info.
Okay.
We're going to put together a whole contact sheet for you all. I want you to have my processing manager's info,
Okay.
my closing manager's info. Tommy has worked with all of us for a long time, so we'll put it all together. And I will tell you, Matt is certainly who we want to be your first point of contact. And we plan on introducing you all to several of our loan officers here, because we have a lot. And, you guys having a connection and working well together is extremely important. But at the end of the day, we are all available.
Mhm.
And I believe the real estate world is amazing. But it's the blessing and the curse. If you're not structured properly, you'll drive yourself crazy. And if you're structured properly, you're going to make a ton of money, and you're going to have a ton of time to actually enjoy that. But it does have to, that's where the team piece comes in. I can give you a quick example. Matt was in Charleston on vacation this weekend, and one of his agents called me at 7:30 at night on Saturday because the buyer that you guys have all heard this, not in a rush, just want to get pre-approved. And so their loan was submitted to underwriting for that certified one because we had time. And all of a sudden, Perfect House pops up. They saw it, they love it, they want to write an offer. Right. So she called me, she said, and we asked that we will let you all know when one of us is out of pocket, so you know where to go. And she called, I know Matt's on vacation. Can you work on this? I jump in, I update their pre-approval. We're comfortable with it. They submitted an offer, they got it. So now she's got a buy side under contract and she's preparing a listing today. That's important. It's also important that Matt got to enjoy his vacation. So that will always happen with us. There will always be plenty of coverage. And yes, you'll get my info.
Taylor, could you tell us about your loan officers in other areas? Not so much about the loan officers, but your footprint, I guess, is what I'm trying to say.
Sure. Did Matt get into the NFM and correspondent lender and what a lot of that means and how we're structured?
No.
Okay, so this is a little bit higher level, but I think it's very, very important. NFM is a national lender. They're a correspondent lender. So we are set up with, it used to be 15, it might be 16 or 17 now, but we have relationships with a ton of servicers and investors. But we are not a broker. So we're not a Wells Fargo that's going to lend the money and then collect the payments. And we're not a broker that's going to collect the credit report and the pay stubs and W-2s and all that, and then send it to some other company to review and tell us if they want to fund that loan or not. We're in the middle as a correspondent lender. And this is most of the actual lenders you know of in the area. So when we're pricing a loan out, we're looking at interest rates from Chase, from Wells Fargo, from Round Point, from PennyMac. It allows us to be very competitive with our products and our pricing. We chose NFM, however, opposed to the rest, because they believe in cutting out a lot of the minutia that a lot of companies have. And there's the big four, we call them, which is the CEO, the president, the COO, and a business development officer. And it's those four, and then it's the branch managers. All the branches around the country are franchises. And so my business partner and I started the franchise here in Charlotte, and just word of mouth and our business growing. We were doing a lot of business in Greensboro. They asked us to have a local presence. We asked them who they would recommend as a good loan officer. We ended up really hitting it off well with her. She became our sales manager, and we opened a Greensboro office May of 2019. Then the same thing happened in Fayetteville. We opened a Fayetteville office. So we now have offices in Greensboro, Fayetteville, Bridgeport, West Virginia. We just opened Huntsville, Alabama, December 31st, and we'll be opening Myrtle Beach in 2 weeks, and Clarksville, Tennessee. And a lot of it is just organic. We will never grow beyond our capacity. I've seen that happen too many times in a lot of the other places I've been in this business. But if we can expand our footprint and take our process to other areas, then that's what we want to do. And so it's worked very well. All of it filters back up through myself and Chris, and our team is all that is strictly our team of processors, underwriters, and closers. So we do not go to corporate if we need general decisions made. Something super, super high level, I will. Something that could pose a $30,000 or $40,000 buyback on a loan, I'll consult my COO. He'll put that ball in our court. And if we're willing to take that chance, then we will. So there's a lot of things there that really does position the Taylor Group different than most other lenders. But it's nice that most places out there have their own processor that they work with all the time, but underwriting is in corporate, and you just never know what you're going to get. And our underwriters report directly to us. They're not going to do anything illegal, but they'll absolutely pick up the phone. They'll talk to us. They'll work through things. And we can call them and say, here's our situation. This is what we've got. What do we need to do? And they'll give us options. That stuff's really valuable. So, Tommy, is that what you're looking for?
Absolutely. I appreciate it.
You're welcome. That's also, guys, just so you know, what allows us to make quick decisions with you all. you come to us and say, I'm tied in with this school and I really would like to try and make a play to be the go-to realtor for this school. Would you help me with it? Absolutely. What do we need to do? Do we want to do a little lunch and learn with them and buy them food? Do we want to offer a $500 or $1,000 credit to closing costs? What do we need to do to attack this? And we'll give you a lot of good feedback there. And that will help you feeling confident in you're not just a real estate agent that has to give out 3 lenders. You're coming into something with, this is who I am, this is what I do, this is my team, this is the value we bring. Oh, and by the way, we'll do this for you to make your life better.
So thanks for mentioning that, Taylor. A lot of times I have, in the process of gaining that influence and building rapport with a client that I didn't know previously, I would tell them, look, I would be willing. I'm so I guess I'm so confident that my lender will be able to help you that I know that right off the bat, I can tell you he'll give you a $500 credit at closing and I'll match that. So right there, you have $1,000 out of pocket they don't have to pay. And that's value added. So upfront. So just talk to Taylor, Matt, about something of, the possibilities of doing something like that and how it would work. But I know the Taylor group, they've always been very flexible with me and my clients and getting them off the fence and getting them under contract. And I'll go ahead and say this, that we are, hopefully I'll have a green light today, but we have an upcoming social event that we are going to announce where the Taylor group will be there to answer any of your questions as well sometime next week. So since I don't have a confirm on the venue yet, I won't put it out, but hopefully by the end of the day, we'll have that information. I can put it out. So look forward to spending some more time with you, Taylor, you and Matt, and any of your team that's going to be coming. So.
Yeah, man, us too. We always have a good time with you guys. So it'd be nice to meet some of the new faces.
All right, guys, I just want to thank Brandy, Chanda, Christy, Dylan, Aaron, Jessica, Karen, and Lauren for getting back on. Sorry for the faux pas earlier, but Zoom is Zoom. And for some reason, I lost my co-hosting privileges, and that's why the Zoom went down. But anyway, thanks for tuning in, and we will see you again next Monday at 9:30.
Thank you.
Thanks. Thank you.
See you guys.
Thanks,
Thank
guys.
you.
Thank you. This was